Hello, today is June 2nd, 2020. I am Ashley Wilkin, Senior Wealth Manager with the Rice Partnership, and I have Orest Saikevych here, our Chief Investment Officer. Orest, so we are in the middle of a global pandemic and protests are taking place all over the country. Yet the S&P 500 continues to rebound from the lows of March. The S&P has been hovering above 3,000 for almost a week now. So is the S&P out of touch with reality, or is it actually signaling that the economy is in recovery mode?
Okay. First of all, Ashley, as far as the protests, it is obviously a human tragedy, and there will be action needed to prevent the social injustices and also the violence that ensued from occurring again. That said, other instances in history where we've had racial and other unrest, usually the market looks past those events, and a good example is 1968, when we had the assassination of Martin Luther King, followed 2 months later by the assassination of Robert Kennedy, followed 2.5 months later by the violence at the Democratic Convention in Chicago. In spite of all that, the market was up 11% that year overall. So not to sound insensitive or anything from the social point of view, but from the market point of view, generally the markets look past that and look forward. As far as stocks and where the market is now, I think what we're seeing to a large extent why the market is as high as it is the fact that we've had massive government interventions and stimulus, unprecedented really, from both the Fed and also from the federal government. The Fed has introduced a number of programs due to support the credit markets, keep them to function normally. And the Congress has passed a $2 trillion stimulus package to help small businesses and people that have been laid off from their jobs due to COVID-19 to help keep them afloat going forward. Also, more recently, in the last couple of weeks, we've seen a lot of states and municipalities start reopening their economies, and that's certainly led to some optimism. There has been a bounce in some of the state economies. If you look at real-time data, open table, restaurant reservations, airline reservations, things of that nature, along with government data such as the jobless claims, you're seeing an improvement, albeit from very depressed levels, but it is encouraging. We're seeing that for the first time in a couple of months. There is hope of more government stimulus. We'll see what happens, but both sides are talking. They're a bit of a ways, but there's hope that we will get at least one more round of stimulus. And finally, vaccine development is well along the way. There's hope that we'll get at least one vaccine at some point that will be developed. So all those things have contributed to the market having risen. And remember that stocks are a discounting mechanism. They discount what happens in the economy often by several months. So
what is the shape of this recovery? Are we in a V-shaped recovery, or W, or something else?
Well, everyone, it seems like they have their own, whether it's V or W or U. I've got my own version here. It's basically where we show a very steep down and then a partial quick recovery followed by a more protracted recovery.
So where are we on that, on your chart?
I would say we're probably, down here, basically starting the trip back. Initially, we're going to see a quick bounce. I mean, you need everyone. There's pent-up demand. For one, I need a haircut, so I'm looking to get one this weekend, and a lot of other things that people had put off that they can now do. The second part of the recovery is going to be more protracted, and you're going to see that in the companies that have been most impacted, those in the travel industry, tourism, the casinos, etc. That those will take a lot longer to come back overall. So I guess I don't know if you call the shape a Nike swoosh or a square, inverted square root sign or whatever, but that's at least currently the way we see things unfolding.
There's definitely a lot of factors at play here, and we look forward to seeing your full economic outlook at the end of this quarter. Thank you, Orest.
Thank you, Ashley, and take care, everyone, and stay well.